Welcome to the October 28th, 2018 edition of the BitcoinNews.com Daily Podcast, where we cover the biggest stories of Bitcoin, blockchain, and cryptocurrency every single day. This is your host, Space Marine, live from the Andromeda Galaxy. It's nice over here. Straight to the market analysis. So Bitcoin has been steady at around $6,400 for like 10 days now, or about that. And I'm actually recording this on the morning of the 29th, and that steadiness has finally broke. Bitcoin dropped as low as $6,200 on Bitstamp and Coinbase. Bitfinex continues to have a premium of about $100. And by the way, Bitfinex instituted a new fiat deposit distributed banking solution, and it takes about like 6 or 10 days for the deposits to go through. And it seems like as we get past that window of 6 or 10 days, Bitfinex's premium has reduced to less than $100. So it's about $100 or maybe a little less, the premium between Bitfinex and the rest of the world. So right now, Bitstamp is sitting at $62.70, and it's a very volatile trading session. It's a lot different than the past 10 days, so it's going up and down quite rapidly, but mostly down. Overall, the crypto market cap was quite steady at around like 209, 210 billion on the 28th, but now here on the morning of the 29th, it's down to $203 billion, and Ethereum's dropped below $200. Ripple's dropping pretty harsh, but it's at 44 cents, which is still a lot higher than it was like maybe a couple months ago or a month ago. Litecoin took a big hit. It dropped 6%. It's down to $49. Finally fell below that $50 mark. One thing that's very noticeable is Tether is really getting close to parity now. So Tether's market cap declined $900 million, which represents people redeeming like $900 million of Tether. It was at $2.8 billion, and now it's at $1.9 billion. But now, finally, Tether's getting back towards parity. So it's really interesting how the market's dropping right as Tether shoots up to parity. I wonder if there's any link there. I would have to think about it. Monero's holding pretty steady above $100. But overall, a lot of cryptocurrencies are dropping. And some of the weaker, smaller cap coins, or moderate cap coins, whatever you want to call them, they're dropping even harder. So we've lost like $7 or $6 billion in market cap on the morning of the 20th. So like throughout the 28th, which is what this show is for, it was very steady, but now it's worth mentioning because I know people will hear this on the 29th, that yes, the market has finally become volatile again, and that's very normal for crypto markets. Overall, the crypto markets are a lot higher than they were like about a year and a half ago or 2 years ago. So overall, I wouldn't even call this a bear market, but yes, Bitcoin's dropping back towards that support level of 5,800. So this might actually be a really good buying opportunity once it shakes out today. Now for our first story. So, wrapped Bitcoin is going to soon be available on the Ethereum network. And this is a great idea. It's an ERC20 Ethereum token called WBTC, wrapped Bitcoin. And each wrapped Bitcoin is actually 1-to-1 with actual Bitcoins. So, BitGo is a qualified cryptocurrency custodian in the United States, and they're going to be backing all the wrapped Bitcoin, and like they're insured, they have reserves. Like you cannot be a qualified custodian in the United States and have any potential to lose money of customers. So wrapped Bitcoin's very guaranteed. And the cool thing about this is with this, it's like a stable coin for Bitcoin, but it's a stable coin based on a crypto. So most of the stable coins like Tether are based on fiat currency. And fiat currency needs to have reserves, and it's a lot harder to keep secure. And also, besides that, it needs auditing. So like Tether and Pax and Gemini Dollar, they all need auditing to ensure that the dollars are there, and that makes it a very, like, you have to trust a lot of humans for that. With the wrapped Bitcoin, it's all on the blockchain. So when wrapped Bitcoin is created, like there's going to be affiliated merchants. Like there's going to be verified merchants on the wrapped Bitcoin network that can create wrapped Bitcoins, basically. BitGo is the one that actually creates them. But the verified merchants deposit the Bitcoin with BitGo. And then a smart contract is created. So simultaneously, the Bitcoins go into custody with BitGo, and then a smart contract is created for the wrapped Bitcoin. And then merchants can give these wrapped Bitcoins to users, but users must go through Know Your Customer and anti-money laundering verification, because BitGo cannot be doing any business without KYC and AML because they are a qualified custodian. But it's worth it because these wrapped Bitcoins, the Bitcoins backing the wrapped Bitcoins are guaranteed. Like even if there is a problem with BitGo, there's insurance. So there should never be a problem where the wrapped Bitcoin doesn't pay out. So, and getting back to the auditing, all the info is going to be on the blockchain. The info on the Ethereum blockchain and the Bitcoin blockchain is the audit in real time. There doesn't need to be auditing. There probably will be auditing, but it's in real time anyone could audit them. So this is a lot more, I would guess, I don't want to say like this, but it is a lot more trustworthy than a fiat stablecoin, honestly, because we saw what happened with Tether recently. Tether's coming back to life, but there were some problems for a couple weeks that might have caused people to lose money. So merchants can issue the wrapped Bitcoin and then also redeem them. So the merchants could take the wrapped Bitcoins and redeem them through BitGo, and then the wrapped Bitcoins are burned and the Bitcoin's given back to the merchant. And users can go to the merchants. Like, let's say someone gets a wrapped Bitcoin, they would have to go through KYC and AML, but then they could redeem Bitcoins through. So like this is going to be pegged 1-to-1 with Bitcoin because of its redeemability. And this was spearheaded by Kyber Network and Republic Protocol, which are decentralized exchanges on Ethereum. And other decentralized exchanges and DApps have jumped on board, including MakerDAO, AirSwap, IDEX, Radar Relay, Hydra Protocol, Compound, Harma, Set Protocol, and Pricto. So basically, wrapped Bitcoin is really useful for decentralized exchanges because they didn't have Bitcoin on them before because it's an Ethereum. They only had Ethereum tokens, basically. That's the only way it works. But now there's an Ethereum token for Bitcoin. And this could increase trading activity and liquidity. And also for decentralized applications, people prefer to use Bitcoin for business purposes in the crypto space because Bitcoin's the most reputable, the most valuable, and the most stable. Even though Bitcoin could be unstable, it's the most stable relative to all the other cryptos. So this is really good for business with DApps and such and decentralized exchanges. And so wrapped Bitcoin's probably going to be a hit. And like I said, with all those organizations already on board, and there's probably going to be a lot more. I mean, this is just coming out. It seems like it's an Ethereum-wide movement because the Ethereum network needs something that represents Bitcoin. And this is really Bitcoin. Yeah, it's an Ethereum ERC20 token, but it's fully backed by Bitcoin. Now for our next story. A Chinese court, the Shenzhen International Court of Arbitration, has ruled that Bitcoin is property. So there was a case where $400,000 of Bitcoin, Bitcoin Cash, and Bitcoin Diamond was not paid back, basically stolen. And then China ruled that this Bitcoin and these Bitcoin Cash and Bitcoin Diamond is property and protected under Chinese property laws. And this is a major landmark milestone case because before there was no definition of this and it was unknown and uncertain for people using Bitcoin. Hey, is this going to be considered breaking the law at some point? Now a court has affirmed it's not breaking the law, at least for now, and probably in the future too. And this is major because China had banned fiat to crypto trading, and the biggest exchanges, Binance, Huobi, OKX, fled China, so the trading for fiat is banned, initial coin offerings are banned, all the offshore exchanges were blacklisted through the Great Firewall of China. But now, it's very much allowed to own Bitcoin, transact Bitcoin, and mine Bitcoin, and that's protected under Chinese law. So Bitcoin is alive in China. Because Bitcoin itself is a money system. You don't need any other money system. So it might actually be really interesting to have such a huge, powerful country that forces the Bitcoin users to actually use Bitcoin for its purpose and not connect it with fiat. I think that's an interesting experiment. And so a major thing is China has 74% of the mining hash rate. And before, there was some uncertainty. Hey, is this legal? And there were some little crackdowns, but now it's declared legal. So people can mine Bitcoin, and it's their property, and then they could transact the Bitcoin for the goods they need. So, you could transact Bitcoin, you can make contracts with Bitcoin, and maybe the 74% of mining hash power in China will increase. And some people might not like that so much mining power is in China, but it's actually good for the Bitcoin network not to wipe that out. So, yeah, Bitcoin's going to be healthier due to this legal decision from the Shenzhen International Court of Arbitration. Now for our next story. This one's really interesting, and yeah, it's an exit scam, basically. That might be speculation, but it really seems like one. So when a Canadian exchange named MapleChange claimed it was hacked and then it deleted its website. So MapleChange was a fairly small exchange with 1 to 10 Bitcoins of trading per day, but then they reduced their fees somehow and caused a massive surge of trading. Now on the first day where the trading surged, they had 913 Bitcoins worth $5.9 million traded in one day, and then the hack occurred instantly right then. So it's really weird. That's a weird thing that happened. Hey, they finally got some real volume. They had several $1 million go through, and then boom, they're hacked, supposedly. So the Twitter reveals everything. There was a temporary maintenance upgrade to version 2.0 about 18 hours before the hack occurred. And then they announced the hack occurred. 12 minutes later, they announced that the hacker had withdrawn all the funds, and then they were doing an investigation. 10 minutes later, they said the investigation is done. Well, they didn't exactly say that, but they're yeah, we can't refund customers' money. We're closing down the site. And they deleted their website. They deleted all their social media. As of now, though, as of this morning, their Twitter's back online, but it's not any better. But yeah, they restarted their Twitter probably due to like a lot of people getting really angry. Like whoever actually knew this guy or had his contact info, they were probably like really attacking him. So he started the Twitter up again, but it doesn't look good for anyone that used Maple Change. And this seems like an obvious exit scam. And it was really like for example, Mt. Gox is what people think of when they think exit scam. But Mt. Gox got hacked. They kept operating for like many months, almost a year. And they were trying to make things right, but then Bitcoin's price didn't like keep up with them. Like it didn't like if Bitcoin's price went up a lot, or actually no, if Bitcoin's price stayed down. Yeah, I'm sorry for that. So if Bitcoin's price stayed down, they would have been okay. But then Bitcoin went up a lot, and they couldn't like pay out. So that was the problem. But Mt. Gox tried, and they didn't like totally disappear. In fact, they did litigation process, and people were actually getting refunds in early 2019 from Mt. Gox. Not full refunds, but full fiat refunds at least, maybe a little more, but not full Bitcoin refunds. But for Maple Change, they didn't do any litigation. Like, they said they did an investigation, and then it was done. Investigations take police, lawyers, the government, lots of time. And they didn't do any investigation, obviously. And then they shut down their site. They announced no one's getting their money. They deleted everything. So the only evidence of their existence was, like, the Wayback Machine and screenshots. And which revealed, like, the story. But now their Twitter's back up, so people could look at their Twitter, but who knows if they're deleting things from the Twitter. Of course they probably are, but I don't want to speculate. And I think this will probably end up being, like, Canada's probably already investigating this. I'm sure there's many angry investors. And we'll see what happens with this legal case. And I think this is one of the most obvious exit scams. Once again, this is speculation, but this seems like one of the most obvious exit scams in recent times. We haven't seen anything like this in a while. Such an obvious exit scam strategy where, like, hey, they're hacked and then they disappear. For a real, it's not a real exchange, it's like a small exchange. I guess it is a real exchange. But yeah, millions of dollars were somehow lost. All at once. After they had 1 to 10 Bitcoins per day, suddenly they got millions of dollars, boom, they closed it down. Alright, now for our final story, and perhaps the most interesting story of the day. Kim.com, I'll read his tweet. He says, the U.S. empire now pays $500 billion in interest payments per year to service its debt. U.S. debt increases by $1 trillion per year. It's a death spiral that cannot be undone. Self-destruction and USD collapse are unavoidable. Get out of USD and U.S. stocks. Buy gold and crypto. So this is quite a proclamation. So I deep dived this. I really went into the info. So the United States debt is a serious problem. I'm just going to go through the debt. Actually, you could read the article on bitcoinnews.com, and I really went into in-depth with the history of the debt. So from 1997 to 2001, the debt was relatively steady in the USD 5.5 to 5.8 trillion range. That's a lot already. But then September 11, 2001 happened, unfortunately, where the Twin Towers got destroyed by terrorists. And the U.S. debt rose to $7 trillion by early 2004 because a global war on terror started on September 11, 2001, like immediately. And then the conflict spread to Iraq, and that's controversial, but we don't go into politics here. So the conflict became a war of attrition in Iraq, and the debt increased to $9 trillion by 2008 to fund this war of attrition. And then if things weren't bad enough, the Great Recession of 2008 began. By the way, the global war on terror continues to this day. It costs a lot of money. But then the economy got bad. So the Great Recession happened. It was the worst economic crisis since the Great Depression. Trillions of U.S. dollars were used to bail out banks and corporations to keep them alive. The same banks and corporations that likely caused the recession were bailed out at the expense of everyone else. But I'm not going to go too much into that. We're just talking about the debt. And so the debt exceeded $11 trillion by early 2009. So it was going up a lot faster suddenly. And by the way, in 2009, Bitcoin was launched. So Bitcoin was launched because of this Great Recession. Like, Satoshi might have been thinking about it, but when the recession happened in 2008, he wrote the white paper. He might have done the whole white paper that year in response to the fiat system totally not working and serving the people right. He wanted to create a decentralized form of money that cannot be abused by the governments like the way they were doing during that Great Recession. And by the way, the bailouts continue to this day. So they started doing bailouts and they never stopped. And that's why the debt's really exploding. Yeah, it was $11 trillion in 2009. One more note on Bitcoin's launch. It says, The Times, January 3rd, 2009, chancellor on brink of second bailout for Bitcoin. So in the Genesis blog for Bitcoin, the first blog, it says something about the 2008 recession, indicating the 2008 Great Recession, where the debt exploded due to money printing and such, is the reason for Bitcoin's launch. So by 2012, the debt skyrocketed to $15 trillion, and it never slowed down. It's only going faster now. By 2017, last year, it exceeded $20 trillion. Remember we said it was $5.5 trillion in like 2001? But by 2017, it was $20 trillion. And then that coincided with Bitcoin's record highs of $20,000, but there's not necessarily a link there. It might have a slight effect. or actually major effect, but I don't know. I have to look into that if I was going to say anything about it. But yeah, coincided. The debt hit $20 trillion when Bitcoin hit 20,000. Of course, Bitcoin's gone down now, but the debt has not gone down. So now the debt sits at $21.7 trillion. It's going up $1.5 trillion in the past year. It's gone up $1.25 trillion in the past year. And that's an increase of $3.45 billion per day of United States debt. The Bitcoin market cap is $112.5 billion. It's actually gone down slightly to $110 billion as of this writing. So it only takes a month for the United States debt to increase by the entire market cap of Bitcoin, just to put this in perspective. And then, so now looking at the budget for the United States, the budget deficit will be nearly $1 trillion in 2019 projected, but they were off last year. Like they said it was going to be less than $1 trillion, and it's over $1 trillion. It's like $1.25 trillion in the past year. So they're off by that. And they're saying it's going to be $1 trillion in 2019. It might be more. That's speculation, but that's usually true. These budgets are usually optimistic and don't account for emergencies like serious war incidents, which happen like every year, actually, unfortunately, or serious economic collapses, which don't happen like every year, but there's some economy troubles that are not expected every year. But let's say the 2008 financial crisis repeats itself. Yeah, they're not accounting for that. So they projected the budget out to 2028. And they're saying right now the interest rates for the debt, or the interest paid for the debt, is $364 billion. And they're saying it's going to grow by $50 billion per year to this $1 trillion of debt. The $1 trillion deficit. So the deficit gets added to the total debt every year. So they're saying by 2028, there's going to be $869 billion of payments for the debt. And it'll probably be more because they're not accounting for serious things they can't even, like when they make the budget, they don't plan for like a major war. Like they put a little money for war, but they don't like plan, or a lot of money for war, but they don't plan on like a full scale war. They don't plan on a full scale economic collapse. By 2028, we're gonna have like all of those and more. So they're saying the interest payments for the debt's gonna approach $1 trillion. They're saying the debt's gonna be over $1 trillion. Well, the deficit's gonna be over $1 trillion per year. So basically, what this budget is saying is that the United States cannot afford to slow down the deficit in their budget, let alone pay back any of the debt. And this is because if they reduced their deficit, then that would take a ton of money out of the U.S. economy. And it would really hurt the economy, and it would just be an economic collapse. But if they keep going on this path, here's what happens. So they sell bonds to pay for this debt. So bonds is like when they sell to individuals, entities, corporations, or countries, they give them a piece of paper bond in exchange for the actual money, and that's what pays for this debt. And all this debt's held by bonds right now. So it's a ton of money from other people being held by the United States, basically. And they owe it. And they pay interest on it. It ranges from 2.3% for like 3 months to 3.3% for 30 years. And so after a long period of decline for 10-year bonds, it declined all the way to 1.5% interest in the middle of 2016, but now it's up to 3.2% as of October 2018. So the interest rate for the 10-year bonds for getting money for the debt, it's gone up by over 100%. So the United States has to pay over 100% more money to fund their debt. And this is likely due to decreasing demand for bonds because the United States is issuing more bonds than people really want to buy. So they got to increase the incentive for people to buy the bonds. They make it like a really good deal. But here's what's going to happen. The bonds rates are going to have to keep rising at this rate. Like the United States will have to keep increasing the interest rate on the bonds for people to want to even buy them. But if it rises too much, people are going to get spooked because they'll know, hey, the United States can't pay this interest rate. And it might be already happening in a sense because people know the economic situation, how big the debt is. Even the debt number, the more the debt number rises, the more people get spooked, the more these bond buyers get spooked. So bond buying demand is drying up, and that's why it's gone up over 100%, like the interest rate that the United States has to pay. And the more it dries up, the higher the interest rate goes, until eventually they really can't even sell bonds anymore, and they have to pay back. That's just how the world works here. So then they're going to have to print money, and it's already happening. It's like a hybrid situation right now where they're printing money and also issuing bonds. But once it really gets bad, they're just going to have to all print money, and they can't stop printing money because the debt's so huge, they have to pay the interest rate, at least, and the interest rate is huge. And they got to keep the country running, so they're going to have to print money for that, and it's already happening in a sense. There's been 53% USD inflation since the year 1998, which is roughly 2.7% per year. That's not very healthy, but it's going to get a lot worse, probably, unfortunately, because right now they're still able to sell a lot of bonds. So basically, the essence of this, increasing budget deficits, which is happening. The budget deficit has been constantly increasing, as we showed with that debt. The debt number rising is directly related to the budget deficit increasing due to war and economic crisis. That leads to increasing bond rates because the bond buying demand dries up because they're trying to sell so many bonds. People don't want all of them, so they got to pay. You got to pay the bond buyers even more to make it like a really good deal that they can't refuse. And this ultimately leads to printing money as a last resort once the bond buying demand really dries up. And it's a hybrid situation right now. We're already in like the later stages of like, hey, they've issued so many bonds that they have to print some money too to make this work. And this could very well cause hyperinflation of the United States dollar, and that would be catastrophic for the global economy. So let's say the United States decides they're fixing the budget deficit, and they're not going to have any budget deficit, and actually start paying back the debt. That would ruin the U.S. economy. But if they keep on this path, they're going to ruin the global economy and the U.S. economy. Either way would ruin the global economy, either situation. So this is a really bad situation, and .com is totally right. So he's saying buy Bitcoin and gold. Bitcoin and gold cannot be printed by the United States. They're assets that must be bought with money. They cannot just be printed at will like the fiat dollars. And he's saying now is the time to buy, and that makes sense because the value of the USD is relatively stable right now, so this is the time to buy. The USD is going to get crazily devalued due to the situation, and then it'll probably be too late to use USD to buy a significant amount of Bitcoin or gold. So buying Bitcoin and crypto especially, but also gold's pretty good too. But gold's not really good for like international payments or any sort of payments. It's hard to carry around. Like it might work for daily life when you're walking around a city, but you can't send it like across the country very safely, honestly. So Bitcoin and crypto seems to be the future, and .com's onto that. And yeah, the United States is having a serious debt problem that's going to really be major news over the next decade. That's all we have for you today on this October 28th, 2018 edition of the BitcoinNews.com Daily Podcast. Come back tomorrow for another exciting episode. Go to BitcoinNews.com 24/7 for the full spectrum of Bitcoin, blockchain, and crypto analysis. This is your host, Space Marine, signing out.